Alrighty, hello everyone. My name is Rhett Phillips. I am the president of the KU Blockchain Institute. On today's Block Talk, we're going to be talking about tokenization. I think this is a very cool topic that a lot of you will find very interesting. It has a lot of applications in today's world. So what is tokenization? How does it work? What does that process look like? So tokenization is replacing data or an asset with a digital placeholder called a token. This token can be bought, sold, or stored. And tokens have a link to a real world asset. So if you look at that schematic on the bottom there, you'll see buildings, artwork, precious metals. They can all be tokenized through encryption into a product or a token that can be bought, sold, and traded. So what are some of the benefits of tokenization? Tokenization provides liquidity to investors. So when you think about investing in the housing market, there's a pretty high barrier of entry to that. And once you own something like that, it's hard to sell. There's a lot of red tape. There's a lot of lawyers. There's evaluations. It's just a very time-intensive, labor-intensive process. But now think about if you own a fraction of a building and you have tokens that you can trade readily. In this type of economy, you could sell your shares in a building pretty quick. And for those of you who don't know what liquidity means, liquidity is just the speed at which you can turn something into money. Tokenization also allows peer-to-peer transactions or the trading of assets without having to go through a intermediary third party or even physically exchange the asset. So when you think about how we transact now, if you were to buy something, for example, precious metals, you typically have to go through a mint, get it certified that it's actually gold or it's actually silver, and then you have to pay the mint a certain fee, and you have to pay taxes on that. So that's the current process. But in a process of tokenization, you could trade an asset on the blockchain network as a token and have confidence that that token is what it says it is because of the underlying technology of blockchain, specifically cryptography. Tokenization also reduces the barrier of entry to investing for small scale investors. So it essentially democratizes assets. So if we go back to that building example, if you can buy a fraction of a building versus having to have millions of dollars up front to pay for a building, this opens up a new marketplace for a lot of small scale investors or just, your common American, which is a very, profound effect. Tokenization also provides transparency and immutable records of ownership because the fact it uses the blockchain network. So this is a very important feature of it because when you own a token, if you can prove it to others that you actually have a link to that real world asset through a token, they're a lot more comfortable trading that asset. And kind of finally, tokenization provides faster and cheaper transactions than the typical means and methods we have currently. But what are some of the drawbacks of tokenization? Kind of what's holding it back to this point? Currently, there's a limit of regulation on how this process works. People are fearful of fraudulent or illegal activities. So if I owned a gold bar or I owned a house and I was wanting to tokenize it and sell it to people, you want legal security in the fact that that when you sell something, it's going to be in a trusted manner. And why blockchain does that in a trusted manner, people could figure out potentially a way to manipulate it in using it in a fraudulent manner if someone else doesn't understand how blockchain works as well. Another one is kind of a mental barrier. Why would someone want to own half of something or a quarter of something? Why would you own, a fraction of a car? It just doesn't quite make sense. It's not quite intuitive of how we typically do things. We like to buy things in whole or in quantities. Typically, they're physical assets. So now that something is a token stored on a computer or the internet, it's a different feel than what we're used to. Another one is, how do you evaluate the price of something, right? So when you tokenize something and let's say you're selling like 50% equity in your apartment complex, right? And you're the owner. How do you evaluate 50% of your apartment complex looks like? How do you evaluate the cost per token? How many tokens you issue? These are all things that there really isn't a clear answer. So at this moment, it is kind of a gray area. And finally, probably the most, probably the largest issue at the moment is this last one, is the fact that if thousands of people own part of an asset, who is responsible for taking care of it? So again, let's go back to the building example. You have to mow the lawn, you have to do the landscaping, you have to pay the upkeep, you have to pay the plumbers, you have to pay the electricians, all this stuff. Who actually pays for that? If a lot of people own the same portion in a building, how do you know how to pay for the upkeep of something like that? So this is kind of a problem at the moment that needs to be addressed, and it's something to keep in mind. So we kind of touched on a lot of these throughout the presentation, but these are examples of stuff that can be tokenized. So precious metals, real estate, art, jewelry, luxury cars, even tickets. And probably the newest emerging technology in the tokenization space is NFT tokens, so non-fungible tokens. What non-fungible means is that there is no other token just like this one token. It's a specific and a unique token. So something fungible may be like a $1 bill. It doesn't matter which $1 bill you have, they're each of equivalent value, but this is not the case with something non-fungible. And what a non-fungible token is it's essentially a digital certificate of ownership, and it gives someone claim to something of a digital asset. These are really cool. I would encourage you to look more into NFTs. We might have a later video talking about this very subject, but this is the conclusion of the tokenization video. If you have any questions, you can reach us on the About page of our website. And thank you for listening to this series of the Blog Talk.